CREA downgrades home sales forecast for 2023 and 2024. Expects stabilization in prices. The Canadian Real Estate Association, CREA, has revised its forecast for home sales and average home prices for 2023 and 2024. While the housing market started strong in April 2023, fueled by buyers capitalizing on perceived interest rate peaks and low property values, uncertainty has returned due to the Bank of Canada's unexpected rate hikes. Even before the rate hikes, the sales rally had begun to lose momentum. The largest month-over-month increase in sales occurred in April, followed by a smaller increase in May and a modest 1.5% gain in June. This slowdown can be attributed to a 20-year low in new listings, resulting in significant month-over-month price gains during April, May, and June. Although new listings are now catching up to sales, CREA does not anticipate significant further gains in activity. Some buyers may step back and wait for additional signals from the Bank of Canada, particularly as there is a growing consensus that interest rates will remain high until at least 2024. Consequently, CREA has downgraded its home sales forecast for 2023 and 2024 compared to its April 2023 outlook, as well as adjusted the trajectory for prices. It is important to note that this does not necessarily indicate a return to declines on a monthly basis, but rather a stabilization or slower pace of growth compared to recent months. The updated forecast predicts that approximately 464,239 properties will be sold through Canadian MLS systems in 2023, representing a 6.8% decline from 2022. This adjustment is attributed to the recent increase in borrowing costs and the uncertainty resulting from summer rate hikes, which may limit the rebound in sales seen across most regions in the country. Despite the downgrade, the national average home price is projected to experience a marginal 0.2% annual decrease, reaching $702,409 in 2023. This forecast reflects gains from additional sales in expensive regions such as British Columbia's Lower Mainland and the Greater Toronto Area, along with stronger than expected price growth observed in the second quarter of 2023. However, going forward, the path for prices is expected to be less steep. Looking ahead to 2024, CREA forecasts a rebound in national home sales, with a predicted increase of 11.2% to reach 516,072 units. This rebound aligns with the gradual return of housing markets to a more normal state and a shift in monetary policy toward a neutral stance. The projected activity for 2024 would fall in line with the 10-year average but remain below the levels seen in 2007, 2016, 2020, and 2021. Additionally, the national average home price is expected to rise by a further 3% from 2023 to 2024, reaching approximately $723,250. However, this figure is still close to the second quarter of 2023, indicating a forecast for price stabilization until interest rates begin to decrease. CREA's revised forecast suggests a slowdown in home sales growth for 2023 and 2024, influenced by rate hikes and limited supply. While prices may stabilize or experience slower growth, the market is expected to rebound in 2024 as housing markets approach a more balanced state and monetary policy becomes more neutral. Even before the latest Bank of Canada rate hike of 0.25% on July 12, 2023, the housing slowdown was evident for the GTA housing market in June. In a recent report released by RBC, it is noted that the real estate market in Toronto experienced a sharp rebalancing of demand-supply conditions in June. According to a CP24.com article on July 10, 2023, this shift was primarily attributed to the Bank of Canada's decision to resume its rate hiking cycle, which prompted some buyers to step back from the market. Home sales in Toronto dropped by 6.9% during June following a significant surge of 32% in April and May when the Bank of Canada kept its key overnight lending rate unchanged. The Bank of Canada's move to raise interest rates again this week aligns with the belief of forecasters that the Canadian economy has not softened enough. The central bank had already increased its overnight rate by 25 basis points the previous month, and another rate hike was widely anticipated. And on July 12, 2023, it was increased by another 25 basis points to its highest point since 2001, and now stands at 5.0%. According to economists Robert Hogue and Rachel Battaglia, who authored the RBC report, the consequences of these changes in demand and supply conditions are evident in the housing market. While home prices continue to appreciate rapidly, a more balanced market suggests a slower pace of appreciation in the months to come. The MLS composite benchmark price in the Greater Toronto Area, GTA, rose by 2.5% month-over-month to reach $16 million in June. However, RBC believes that the surge in home values, which increased benchmark prices by 8.9% since the market reached a cyclical bottom in February, cannot be sustained. The RBC report highlights the increase in the number of homes available for sale across major markets, including Toronto. Despite the growing supply, upward price pressure has not been significantly alleviated. However, if the trend of fewer buyers and more sellers continues, it is expected that price growth will moderate. The report acknowledges the surprising speed at which certain markets, such as Toronto and Vancouver, rebounded during the spring, but also suggests that the future trajectory of the market may be more measured. The RBC report emphasizes that despite the recent slowdown and rebalancing of the housing market, higher interest rates will continue to pose significant challenges for buyers in terms of affordability. The report predicts that affordability will remain extremely challenging for buyers due to these higher rates. The GTA housing market experienced a notable slowdown in June, characterized by a rebalancing of demand and supply conditions. The Bank of Canada's decision to resume raising interest rates played a significant role in this shift, leading to a decline in home sales. The RBC report suggests that while home prices have been appreciating rapidly, a more balanced market indicates a slower pace of appreciation in the future. However, affordability remains a major concern for buyers due to higher interest rates. Please join in on the conversation by leaving a comment. If you found this video and information useful, please smash the subscribe button and hit the notification bell so we can keep providing you with timely information you can apply on a daily basis.